Welcome to this video day. It's Sunday, 1st of October, and what we're going to be looking today is at two high probability trade setups in our view. We'll be going to the charts in a moment. They are AUD, USD, USD CAD. Did a video on them last week, and so far we've got some profit. We've got a good profit in USD CAD, it's 300 pips, and a minor profit in AUD, USD, which is 70 pips. But I think both trades offer the potential for more profit to come, 300 to 500 pips. We're looking for the USD really to firm up from here. Now, making that projection, I'm not doing it just purely from the technicals. I'm doing it from our favourite tool in Forex trading, which regular viewers will know, is the COT. If you don't know what the tool is and you're new to our videos, just click on the explanatory video beneath this one to find out more. If you want to watch the video through right now, just keep in mind, all we want to do is trade with smart money commercial hedgers when their positions diverge from large speculators. Now, and we're looking at the charts. This is my view as of right now. It could obviously change in line with market conditions. If you want our trading techniques and our daily technical analysis of major Forex pairs, you can click on the link beneath this video as well. And also get our review of 30 pairs in relation to COT movements. Right, let's go and look at the charts. Let's start with USD CAD. We'll start first of all looking at the net traders positions.
Canadian dollar, US dollar, it's always the foreign currency first on the COT. We're going to reverse this round when we draw our levels, obviously the USD CAD. But what's important in terms of using the COT for new viewers is to always look for divergence between the commercials in red, large speculators in green. The commercials are smart money hedgers. Large speculators are mostly big funds. That's the commercials who always tend to be the right way round to important market tops or bottoms. And you can see it on this chart. Speculators build up a big net short position down here. Okay, commercials big net long position. What happens? The Canadian dollar makes a massive rally. Okay, it's probably about 1,000 pips. Now, what the commercials do is once prices get up into this zone here, they basically are starting to move their hedges. They think prices have gone too far, so they go net short. The speculators who were short then decide to go long. Okay, you get a push up, and it's here that's really important. We looked at it a couple of weeks ago. Speculators build up a 5-year net long position. Done it. 3 weeks on the trot, increased their positions. Commercials have done the exact opposite against them. Prices break in favour of the commercials by about 300 pips, which is a nice move. However, there is far more to come in our view. So let's go and look at the USD CAD and draw some levels. USD CAD daily chart, and I just want to go through how we've been playing this trade very quickly for new viewers, and then we're going to be looking at some important levels as we come into next week. Right, now in terms of our trading in this one, I noted get through this 124 level here, and commercial buying really starts to come in, spec selling accelerates. Okay, this is all to do with the Bank of Canada. They've hiked rates. You get a nice tumble down, follow through in this candle, and we're then looking for a potential turning point. Okay, it's been a big downtrend, and the actual divergence between the groups is big enough now for a trend change to unfold. In our view, this candle interested us. Okay, after these two big reds, you get a nice blue after making a new low, so we think a low is probably in. This red one, though, however, comes back to test these two bodies, but halts. Then this candle confirms the bottom for us, because what you get effectively is the poke through the 121 level here. Can't take out that one. We finish nice and blue. We come in at 121.65. And basically, when you've got a strong downtrend, the 20-day moving average can very often provide resistance. But because the specs are so short and selling and the commercials are against, and we think this level will give way. Get a bit of a battle though. Touch, finishes on it here, through, then back up and away. 20-day moving average was resistance. It should now provide support. So where could we go next? Well, my own view is, saying in the last video, if you're coming into this trade, and we were just below 124 at the time, buy the breakout, okay? So we moved above 124 quite nicely on this candle. Now we're a little bit of sideways. I think there'd be another entry potentially on a breakout through this level here, okay? Just want to get this tail cleared out, okay? It's about 125.30, okay? If we do, where are we going? Well, you'd say the first level of resistance, probably these two big candles here, bodies. If, of course, you're just looking purely technically. If you're not looking just purely technically and know what's behind the chart, you're going to think, well, these levels, this double top here will not hold, i.e. 126. Specs are going to get run on stop. Keep in mind, on this candle here, that is the last COT report when the specs really have built up their selling again and the commercials have come in against them. Yeah, specs, they've seen this as a big downtrend over time, just want to sell the rally, but it doesn't go in their favour. Some have been taken on stop. There's plenty more stops to come. First level of resistance for us. This is also resistance on the weekly chart, 127.80, okay? That is actually the 20-week moving average. So that's a good level to target. But from our perspective, the USD so oversold. In our view, we should go up to 130. Now, I'm not saying it's going to happen tomorrow, but 130 for us is on the card. So if we do break above 125, where do you want your stop? Well, if you decisively take out 125, you want to be back. I don't think you need to be behind the 20-day. You could be back behind the next round number, which is 124, say 123.65. So you get decent risk to reward. If you want to leave the stop back a bit further, you could. Now, what happens if we pull back? Well, my own view is 123 is going to be good support. So if we dip down to, let's say, those candles there, which is about, what is it, 123.40, look for the USD to firm. Now, obviously, I'm giving my view as of right now. It's going to change on a daily basis. However, I just think, it's been a decent trade for us so far. The way the COT looks this week, I think there's plenty more upside. So, right, let's move on to the next chart, which is going to be Aussie dollar. I'm going to look at the COT
Chart of AUD
USD. And just for new viewers, I've just isolated some divergences between the specs and the commercials, which led to big declines in the Aussie. You got one here where they go against each other. Nice big move down. Step up there buying here. It's a shallower fall. Step up here. Nice fall. And now look at the speculators. They're the longest they've been on the chart. The commercials have really gone against them. It's not only the biggest divergence on the chart, it's one of the biggest divergences in recent years. And what you can see is, obviously, we have come off the highs. The prices are moving in favour of the commercials, basically by about 300 pips, I suppose. But you can see we're still holding the bottom of the channel. So let's go and have a look at some levels on the chart of potential entry stops and targets. The USD daily, and just from a pure technical perspective, since July, just choppy sideways action. Very difficult to trade, obviously, because you haven't really got much volatility either. Now, in terms of when you look at the chart, after you've looked at the COT, you can sort of look for a big break to come to the downside, and that's what we're doing. I'm just going to go through very quickly for new viewers how we've been playing this trade. This big move up here, a lot of speculative buying comes in, commercials sell against the specs. At the time, we didn't think this red candle here could be taken out on a close basis, and it isn't. Okay, so what you get effectively is the poke above, then she settles back, we'll sell, go for the 20-day moving average. Okay, problem is, get through it here, then we go blue, halfway up this blue candle. We thought, actually, you know what, we'll just scratch a minor profit. There'll be plenty of opportunity to get back into this one. And actually, she goes higher again. But this spike here is the exhaustion of the uptrend. Can't get above this one. Okay, we settle blue. But we know we've got the 20-day moving average here again. And this red candle is actually the COT, yeah, the last report, okay? And you can see how much the specs have, you know, increased their buying, commercial selling against them. So coming through the 20, so that's what we're going to do, coming through 79.70, take it out, come back to test it, should now obviously act as resistance, back to test it, then fall away. So basically, yeah, we finished nice and red on Friday, but we're not through the round number yet, okay? This level here, I think, yeah, needs to be taken out. These little tails, get them cleaned out if you're entering fresh, okay? You can always enter on a bounce back to the 20, but I really think we've got to get through 79.70 now. If we do, okay, we know how many specs are in the market. Long, we know there's going to be a lot of stops to be hit. These two candles here, from a pure technical perspective, look like they could hold. Yeah, when you know the COT, you wouldn't be looking for these two to hold at all. You'd be looking for a move down to at least 77, okay? So that would be the first target. And really, and I've got my eye on the weekly chart, you can't really see it on the daily here, but get down to 75. Okay, so a long way to go on the downside. Yeah, well, yeah, you stop by keep it back behind the 20, and then just let it run. Okay, and yeah, in terms of the Aussie dollar on the COT, when you get those divergences, the Aussie dollar is probably one of the best ones for looking at the commercials. That they're always with those big divergences with the commercials against specs. You normally always get 300 to 500 pip move. I mean, so far this one for us is not that big. It's only 70 odd pips on the second trade, but I think there's going to be plenty of downside in this one. So what we're going to do is obviously see how this one pans out. Like I said before, my view obviously changes daily. My bearish view on this though, I couldn't be more bearish of the Aussie dollar actually. Yeah, it looks a good trade. Even if it was wrong, decent risk reward. Really like the look of it. So that is my review of the charts. Thank you very much for watching me as usual. Take care. Have a good day.